To start off the show with our word on wealth, which you can also get now daily by going to donandgino.com. Actually, join us here in the vault by going to donandgino.com because this is filmed live. We have 3 live cameras thanks to Furman with AP Productions. We got Shannon behind the controls here, and you can actually enter the vault by going to donandgino.com and click on the Listen and Chat Live button, and voila, you enter a vault. And that's the only way you can get in the vault because you don't have keys. No keys. Well, we let you in, Dennis.
Thanks to Shannon for pulling the levers and Furman trying to make us look good.
Yeah. Yeah. Well, Pam has made us look much better than usual.
Oh, thank you.
Yeah, we get a little of that glow from Pam.
So right now on our show, we have what's now called the National Real Estate Cafe with Donna and Gino. We actually do a daily update, a 3-minute update every single day of what's going on in the economy, what's going on in the real estate market, why interest rates go one direction, why house prices going this way, what's going on with jobs, you name it, we share it with you. And it's daily with no spins, and it's on time because Dennis, what if they waited till the media got news of what happened this week?
Well,
what would they miss out on?
Well, think of it this way. Yesterday morning, just in the first hour of the Dow Jones trading, 600-point swing in 1 hour.
So they might have to wait till the 5 o'clock news to find that out, though, right?
Yeah,
Too late.
They might, unless they were tuned in with us and had a mortgage professional calling them and saying, hey, guess what? There's a lot of volatility this morning. Just hang tight. We'll get you through it.
That's right. So on our show, we often share with you what's going on in the economy because what goes on in the economy, the factors like an economic calendar, kind of give us an idea what direction stocks may go and interest rates may go. So we actually are in the know ahead of time instead of waiting for news that you see that's 2 weeks old and too late. Because it takes them sometimes 2 weeks to 2 months to compile data. Well, we see trends so we know what direction they're going. That's why we carry a little crystal ball on our table here. So we can give you an idea what direction. And this month's economic calendar had some poor news about retail sales, huh, Dennis?
Well, once again, retail sales came in a little weak.
Yep.
But, you know, we are coming into the holiday season, and that's always the one that they're hoping will save the year. I mean, after all, most of the sales do happen in the last quarter of the year, happen during the holiday season, and that's where a lot of these retailers are going to make their bank or not.
That's right, and I know we help out with that, right, Pam?
Oh, certainly do.
Well, you have grandkids, so you don't have a choice. I know where your pocketbook goes.
Yep.
Okay, so then the good news is this job market has improved. Now I'm going to say it has and it hasn't. It has improved, right, Dennis, with a lot lower amount of people filing for unemployment. When we started this show 3.5 years ago. There was over 455,000 people every single week filing for unemployment for the first time. That number has now gone down, which is good news. Now it's below 300 pretty consistently.
But the big but is the participation rate.
You nailed it on the head. I knew I could count on you, Dennis. Again, Dennis Kotzman.
We need some folks out there participating in the employment market.
Yeah, which means when you see the unemployment number go down from over 10% down to 6%, a lot of people go, well, that's good news. That means so many people are getting more jobs. Unfortunately, it's a lot of people leaving the labor market, meaning 2 things. One, the baby boomers going, I'm done. I'm out. I don't want to do this anymore. I spent my time, and it's too hard to get back into the job market. Or it's a lot of you, unfortunately, just giving up. You know, and after 4 weeks, you don't count anymore.
And it's amazing how they can just go, well, since you're not actively looking, you're not really unemployed.
That's right. And if you're just you're tuned in to the Don and Gino Real Estate and Finance Show every Thursday, 12 p.m. to 1 p.m. right here on AM 1220 KHTS. All right, so we watch the economic calendar. The job market's gone better. The only problem is wages are not going up. That's why it's taken a while for our economy to really get robust and move forward. But the good news is that all this volatility has created some interesting news in the rate market, right, Dennis?
Oh, my gosh, yes. I mean, if you're looking to buy, if you're looking to refinance, and I know we say this over and over, I mean, we're in the business of selling loans, basically, right?
Right.
So what would you expect us to say? But right now, the rates are the lowest they've been in like 16 months.
That's right. So all this volatility's been rough on a lot of you in the stock market, but we're the one industry that goes, yay, stock market's doing bad.
Yeah.
Because people they take their money and they move it away from a volatile stock because they don't have any control over that, and they move it into something that's safer, such as bonds or mortgage-backed securities, aka home loans. And therefore, interest rates go down, and that's been happening, right, Dennis?
Yeah, we've seen the nicest trend align in probably the last 2 months. Steady rates coming down. Yesterday was a bit of a wild ride, but still, I think we'll probably hold those levels for a while.
Right.
And then, it's a supply and demand thing, so don't expect them to stay here.
Right.
Because guess what? Hopefully some people will jump in, start to refinance, start to make some demand for that money, and rates will go up a little bit, but they're still going to stay at nice levels.
Well, take heed, please, of what Dennis Kotzman just said, and that means take action, because we have some of the best rates we have seen in a while. If rates go up just 0.5%, you probably lost between $20,000 to $30,000 in purchasing power. That means that extra bedroom you wanted for Johnny, you got bunk beds now, not their own bedrooms. Maybe you don't get that RV access or the third car garage or the nice backyard. So many good things. So when we come back, we're going to talk about why is the market so volatile. We're going to talk with Pam Ingram about some great stuff happening right here in Santa Cruz and what's happening in the real estate market today when we come back to the Don and Gino Real Estate and Finance Show.